Hello guys. Hello guys, can you hear me? So guys, the reason why I got in this trade, this is a 22 model. This is a buy side liquidity, a place where the liquidity, this a pool of liquidity market came in, attacked it. This a, then that means buy side liquidity taken. And then this is a swing low, market coming to pass it. That means that that's a shift in market structure. When this candle came with a displacement, that means this is a shift market structure after the swing low is taken. These two are a series of order block. These two candles, these two green candles. I place my stop loss at above the order block, a bearish order block. When the market came here, I got in here, around here. That's an end position. Could have added in here a second one. You can see the market placed at the discount region of this fair value gap. Got in, left immediately. Then the next thing is about these are two propulsion block. Propulsion block are a type of order block that's within the main order block, but a market can come past the propulsion block but should not close above this swing high. So by that means I can place my stop loss just above there, because those swing highs should not be taken. And by that we have a very good sensor liquidity down here, and another one that's here. So I'm expecting market to come and attack this pool of liquidity. This is a 22 model. You can get it in the ICT YouTube channel. And then my stop loss just being above this swing high. For the fact that market have took these lows that are here, this low, and this one, it doesn't have to come to take this swing high. That should be a shift market structure, pulling market up. So that one's telling that you are going down. So I expect market to come and take this liquidity. So my take profits are just below the standard deviation, first standard deviation. You measure from this high to this low where the displacement occur for the shift market structure. So by that, like this one times 2, you get this one. This is the first standard deviation, and that's the target that I'm expecting market to come and jug it out. So every my PDRAs, I love when my PDRAs are supporting the price to go down. So by that, I would love market to use this week. This week to go down. That's if the market is really bearish. I would love like to leave a gap here, like a form of breakaway gap, just to go down. Use this fair value gap to go down as well. This fair value gap should support the market to go down. My stop loss is just above this propulsion block. The other thing that you should learn as a trader, you need to know how to place your stop loss, because market can come back. For like this one is very tricky because market is allowed to come back, but I don't like it when it come. If market come and inakwenda chini, it should just continue going down. But it's allowed to have a reclaim to be used like a reclaim fair value gap. For instance, if the market is like consolidating, but this time is a good time for the market to deliver price towards this SI liquidity. Let me check dollar. Yeah, this Barca liquidity. These are equal heights. There's no border above this liquidity. So I expect market to come and take it out. So, there's a pool of liquidity here. This should be the target. And another one is here. But we start with this one first because that's the target at the moment. Let's look at the PSD, or what we call cable. Remember we had news today. We had news at around 2 New York time. Let us check it out. It was for only the PSD cable. This one, Clement count change. So this news you can trade it, by the way. This is a 22 model as well. You can just check it out. Short-term high taken, shift market structure here. This candle came to attack the short-term high there. This is a breakaway gap. So if you didn't get the entry here, you have to get in there because you don't expect market to come back. Or if you haven't got this one, you can just chill as well. Expect market to go down, come repeat. If you check in 3 minutes, this is a good setup. This is a second distribution where the low have been taken. That shift market structure here. Fair value gap coming to fill. This is a breakaway gap, remain unfilled. Market coming during news. You can see how market quickly ran down to the bearish. Here you can see short term taken, swing low taken, fair value gap, market coming during news around 2 exact. But you need to trade news at your own risk, because that's like gambling. I always take, like, if you're trading news, just like gambling. You accept the loss, even in fact your whole account. So in 5 minutes chart, swing low taken, you can see market coming to the fair value gap. That's institutional order flow entry drill, whereby this is just a partial entry into the fair value gap, and then the body left immediately. Just open here, went up, came close below, and then news, it ran down. That's an institutional, that's a very good model, a tradable news, but just know you trade at your own risk. Let's go back to the EURUSD. So this fair value gap, market should not go and close above it. I don't expect market to close above. If that's close above it, I put my stop loss at the break even. Because this fair value gap should support the market to go down. This is a CB. It's a imbalance by side inefficiency type of a fair value gap. So if it's a CB type of a fair value gap, it should supporting market to go down. So if in case support market to go up, that means it have changed its work. So that means it's an inversion. When it comes in inversion, it support market to go above. When my PDRA change their work, for instance, like if it's supporting market to go down and it support market to go, instead support market to go up, that means it's an inversion type of that fair value gap. So this fair value gap, I'm watching how market is going to react to this fair value gap. A good one, when the market have coming to retrace within the fair value gap, it should close below the consequent encroachment of this fair value gap. The consequent encroachment means that midpoint, this black line. I expect the market to close this candle to close below, unlike at the moment sai najua imeshafunga juu, yeah, close above. So that means this candle is still going up, and by that I always limit them because I'm here to get money. So I expect, like you can see this PDRA this week it supported market to go down. So this fair value gap should supporting the market to go as well down. So mnaelewa guys. That's what I love to see. Ikisha toka nje hivi, I will allow that now to leave. Come take this swing low. This swing low. and by that it should come in to take this low. This is a liquid that are down here because you are past the macro between 350 to 10 to 410. So I don't expect market to come above this green candle. This green candle is a propulsion block. This green candle is a propulsion block, so market should not come above this one. Rather should take this swing low and then continue going down. That's how I anticipate price action while trading. So at the moment, since you can see this candle have closed below this fair value gap, that means I expect this candle that to touch the low of this fair value gap. It can leave it like that way. It can just go, but it would be good just to touch it and then leave. That's another entry position. The moment it touches that low of that fair value gap. So remember in the morning I lost around $4. Here, around here, it was around here. You can check the previous video. So at the moment I have 4. So I've already recovered. This is the least I can get. This is my stop loss. And remember, this is a live market. Market open there. EURUSD 3 minutes. So that way I expect down market just to go. Though it have imeingia ndani, imeingia kwa that favor gap. It's okay. I don't have issue with that. So enough it's okay. It should not come above this week. Between these 2 weeks, gani iko juu sana hii. Hii ndio iko juu. So I don't want it to go above and close above this because encroachment. Even natoka kwa market. Because isha toka kwa iko kwa discount part of this fair value gap. So by that it means it should be leaving. Inafaa ikuwe inaenda ikiendanga. I don't have any issue even if close bullish, but just below that fair value gap. I don't have any issue because in the market and there's nothing I can do about it. I can't control market. So oh, this was an end position. That's a good one. Let us check. Yeah, as long as it's close below that favor gap. I can measure this week. You can see the midpoint of that week is the low of this fair value gap. So that's a cost encroachment of this week. So in other instance, so this candle it can come back, touch that cost encroachment, leave. But as well pia inaenda tu venye iko hivyo. Na ikienda pia itakuwa sawa. So I expect this week to be taken. This week, this low, this swing low. You can check these 3 candles. This one, and this one. The low of this one is higher than the low of this one, and the low of this one is higher than the low of this one. So this middle candle, it form a swing low. This is a swing low. Hizi vitu zote unaenda kujifunza kwa channel ya ICT. Just go search ICT, you start there. This swing low is a shift market structure. When the price pass below it, past it, I mean. By that, I'll be checking this volume imbalance as well. Volume imbalance is here. This volume imbalance. That's the low of that volume imbalance. The high of that volume imbalance is here. That's the low and the high of that volume imbalance. So I expect this volume balance to be used as a bearish PDRA as well. All the PDRs that are reading this here, I expect them to support market to go down towards this liquidity, sasa liquidity, and even this another low here. These ones, you can see these are equal lows, and this one. In short, ukiangalia daily, I expect today to be a bearish candle. Like today tuko na bearish candle, bearish price delivery, twende chini. That's what I expect today. Even this week, not even today, this week, you see this candle, expect it to go down. Let's go back. It's what's happening here. This swing high should not be taken at all costs. And you remember, in our 1 minute, tuko na proportional block hapa. So our stop loss is okay. Like market ikikujia stop loss, ikikujia above this proportional block, just know it's going here. Even if I place stop loss here, market will come and take that stop loss. So I don't expect market to come above this proportional block, and even to close above this encroachment if it's a bearish market. To trade in this environment is so tricky. You can just see in 15-minute time frame how market have been just going back and forth. Hapa kutrade lazima uko unajua tunafanya. When market ime left closing below consequential encroachment, you can just check that's below consequential encroachment. That's what I wanted to see. This is a volatile market. Remember, it's a EURUSD. It's not gold. Inafanya hivi. That means that volatile market. Then don't think you have any news that is ahead of us. There's no news here. Even kisha kuna news mpaka Thursday tuko na news na sisi za EURUSD ni you can see already been taken out. My stopper have been taken out. This is a volatile market. Failed to count this volume imbalance. Went up. The best thing is that I've returned my my loss that I got during the first trade that I took in the morning. So that's an equal. Nitaangalia jioni kama nitapata trade ya maana. You can see even kama umeweka stop loss yako huku itakujiwa tu at the end of the day. You can see how market have just closed a new opening gap high. Imefungia hapa ikafunga ika left immediately. So for instance, if you make a stop loss yako hapa, still market can come and take you out. Even if irudi chini sahi, siwezi ingia kwenye market totally. Let me see if you want to use this one as a reclaim fair value gap. Maybe nitaka kutumia kama reclaim fair value gap. Though nah. So kama ungekuwa umeweka stop loss yako hapo, just be assured that ungekusha tolewa juu ya spread. Ishaguza tayari, ishachukua swing high. That's why I always track my PDRA. The moment any of my PDRA are violated, that's it. The violation started with when the market failed to take this swing low, it came back to this swing high. It failed here, went above. You can see this candle of 420 came, took this swing, this low, immediately came close above the fair value gap. That's enough to tell you that it's close above this fair value gap of this green rectangle and above this probation block. That means market is going up. It's going to attack you, that liquidity. You can see it's close above this one. So hata kama ungeweka stop loss yako hapa, bado ungetolewa. It's always amazing and okay to trust your PDRAs. You can't change the market, but the thing you can just do is just, as long as the market is not respecting your PDRAs, wait to it to like just go, just leave, get away from the market, or just control your stop loss, risk management, all that, so that you maximize any opportunity you get in the market. So guys, that's what I have for today. I'll share more videos, more trades with you guys together. Market's going above. If it's close above this fair value gap, just know that in Endaju you can see it's just around above, or yeah, close to the cost encroachment. That means that market is more volatile. How many candles? 1, 2, 3, 4. 4 candles enough for reversal, a pure reversal. That's one candle in 5 minute chart. Yeah, this one candle, it may reverse immediately. That's a volatile market. Let's check out gold. Gold have been good since yesterday. I don't normally trade gold most of the time, but I always just check it. Shift market structure coming here. This a breaker, low, high, lower, low, up close candle, coming to that fair value gap. Here, go up. Gold imekuwa fit by the way. But it's a very volatile market. If you know how to trade price action, you can get good setup in the gold like this one. Short term high taken, shift market structure. I know in 3 minutes I get a setup. Yeah. Shift market structure, fair value gap market to come to fill in second time. It left, I mean. Second distribution, coming to this order block. There. This is a bearish order block coming here to fill in, left immediately, breakaway gap, getting down, taking this swing low. After doing that, you can see these are like relative equal loss that are left here. That's the issue of gold now. Hii sasa liquidity vizuri isha left, isha kuja juu tayari. That's why it's so rare for me to trade gold. Very rare, and I don't like it, by the way. It's better I trade EURUSD. You can see hata kama ungeka stop loss yako hapa juu ingekujiwa. Sasa hiyo ni kitu nataka muone guys. Like hata kama ungeka stop loss yako hapa, it's coming for that stop loss. No matter hata ungeka hata kama uweke huku itakujiwa. For the fact that market is shift market structure means a change in state of delivery. If the market was bearish, now you have changed the state of delivery from bearish move to a bullish move. That's why I always trust this one. Like this one is enough to tell you there's a reason that there's a reason why hii iko peke yake hapo. So for the fact that iko hapo peke yake, market ifai kurudi tena. Like this one, sasa hivi niko hivi, this is a bullish propulsion block. So I can expect market to go above. Just if I kurudi hapa chini tena, itarumia itu kwenda juu to take this buy side liquidity that is above here. And that's a manipulation market because it's going to take buy side liquidity short term. And I think we are in a premium level. I think, yeah. You can see how market have been just playing with this within this range. Within this range, market iko hapa within that range, from this low to that high. Market iko within that range, ijatoka hapo. Since when? On Friday, market ijatoka by this range. So in short, we are going to have big moves coming days. Maybe leo, New York session, or tomorrow. You can check it in a daily chart. You can see in a daily chart this today's on Fridays, the high and low of that Friday candle. These candles zingine ziko within that range from high to the low of the Friday candle. Hizi days zingine, yesterday and today, market jatoka above or below. So it means there's a pool of liquidity that's high and below. And by that means tuko premium level of this Friday candle. Tuko premium. So hii inamaanisha tunaweza chukua hii basa liquidity, but I would love this liquidity to be taken. That's what I want. So by that guys means I'm calling off for today. Thank you for watching my video. Kindly consider subscribe, share, like, comment, and let us meet in the next video. So guys, let's meet in the next time.